Good afternoon. This is JLandaluceA4 presenting you assignment 4, reporting to management. Over the next few slides, I will present you 3 topics. First of them will be financial conditions, which I will present the balance sheet, the profit and loss budget versus actual statement, and a statement of cash flows reports. Then I will present to you 5 financial controls that will help the gains and help mitigate the losses of the companies throughout the years. And overall, I will present to you key terms and concepts that help me present this presentation. First of all, we have the balance sheet. The balance sheet is all this inputs of few numbers between assets, liabilities, and equities. The formula to present this should be assets equals liabilities plus equity. As we can see on this slide, the total assets would be $66,486.45 US dollars, and we have over the other side of the equation liabilities for a total of $44,653.33, which summarizing with the equity, which is $21,833.12, that will come up with the same amount of assets that we have on the other side of the equation, which is $66,486.45. Then we have our profit and loss statement. Our profit and loss statement is the net income equals gross profit minus expenses. As you can see, we have in blue gross profit, which is $19,800, and over expenses we have $11,729.79. So we have a net income of $1,170. Before we come up with these final figures in our balance sheet, we have to make a compliance of each item. For example, we have venue deposits, and we have to see if each of the venues that deposited the amount of dollars are the same that we have recorded or documented in our company's sheets. This is to help mitigate errors and help our financial statements be very current with what actually is happening day by day throughout the year for the company. Then we have our profit and loss statement. Our profit and loss statement is the most commonly used to see how the company is summarized in our net income, which is gross profit minus expenses. This is a broad concept and can help us understand exactly what this concept is. Very easy to use, and you can have a very broad knowledge of how the company is forthcoming. Then we have statement of cash flows. This is a more detailed aspect of how the company is independently handling different activities. We have operating activities, we have investing activities, and we have financing activities. As we can see, for example, investing activities, we have truck, which is an asset that can be seen as an investing activity because of the future usage within the company. These items are handled independently, so we can see how the performer these items are handled independently, so we can see the performance throughout the year without having any prejudice between operating, investing, and financing activities. One of the good concepts that we handle in accounting are ratios. We have different kind of ratios. We have liquidity ratios, we have profitability ratios, we have between so we have this next slide is over accounting ratios. Perhaps one of the most used techniques in accounting is the relationship between each of the items that we saw on the last few slides. And we are presenting here two types of ratios. We have liquidity ratios and we have profitability ratios. In liquidity ratios, we present to you three types. Working capital, which is equal current assets minus current liabilities. We have the common ratio, which is current assets divided by current liabilities. And one of the most remarkable of them is the acid test. It is a more detail which comprehends cash plus marketable securities plus accounts receivable divided on current liabilities. The next one would be profitability ratios. Profitability ratios in this slide would comprehend the net profit margin, which is equal to net income divided by net sales. And one of the most important, as we did in liquidity ratios, is the return on investment, which equals the net income divided by long-term liabilities plus equity. Although we just presented you liquidity ratios and profitability ratios, we have two other kinds which help understand the relationship between different items. On the slides that we presented before, we have leverage ratios and we have efficiency. For them to be really on the objectives of the company, we then have controls. These controls would mitigate the loss and cost and help gain profits to benefit the company's performance throughout the year. We have 5 examples of the work we have done in the last month, and we come up with the data compliances from vendors, which would mean understanding the documents between the bills, the payments, and debts and credits between our vendors and our company. Then we have the user's controls over operating financial tools. This will help limit the access from the people within the company to input or take information from the tools we have within the company. Then we have the limit expenses amounts. This is very important because one of the main reasons most companies lose large amounts or various tiny amounts that become more. This will help limit the access on the people who work within the financial tools in the company. Then we have limit expenses amounts. For example, on the truck example that we had in the last few slides, we had an amount of $14,250 that probably in some companies is above the budget that we need for us to perform well throughout the year. So we have to limit that vehicle amount to 10,000. So if someone is trying to have access to $14,250, we need to limit them so they don't use more dollars. Then we have to create key internal documents for future audits. This will help manage relationship within the company, like we have each department treated as customers and vendors. So each one can have his independent relationship within each item that the company has. And then we have to consolidate the amounts with documented archives that can help us understand how the relation between each month or each year that we have in this process. For example, again, in the truck example, we have $14,250. Then, in let's say next year, we have to aumentate that amount because of increasing values within the truck, so we know that is documented. Thank you very much for listening. This is Jorge Landaluce. Have a good night.